Well, welcome back, everyone. Another exciting day in markets. We've got all-time high area still being held on to by this market. And you can see on the left-hand side of the screen over here, stocks like Meta, Google, Alphabet, Tesla, they did help the market. And of course, Apple as well. And you can see that percentage change there on a day-over-day basis. Microsoft did end up positive as well. We've got a marketplace that has not let go yet. Now, you see a lot of lines on the chart on the right-hand side of the screen over here. This chart is a daily candlestick chart of the SPY. We're going to zoom into the hard right edge over here and take a look at where we are. But I'd like you to remark right off the bat, we are looking at a channel that's a statistical channel that's on the market move since the true bottom, October of 2022. And what we know is that we are very far away from normal. That typically means reversion to the mean is a likelier outcome. It doesn't have to start right away. And clearly the market has not let go. Now I've just zoomed into that chart there for you. And you can see that price action from the end of May throughout the majority of June. And you can see that it conformed to a little mini channel within the bigger channel, which we are, again, at the top of, that bigger channel up there. Now, when you think about the action today and yesterday, we've now got a couple of days below the bottom of that last overall structure that price has been traversing. This does mean there is a potential negative here, even though we had a bullish reversal type candle today. So if I look at this as objectively as I can, there is enough momentum off the lows in today's market to support a little follow through to the upside. But where are we rising up to? We're rising up to a major resistive area where we had selling yesterday, and that would be the center of the weekly pivot range. So having broken the channel, having a close that's negative yesterday, and a reversal today that doesn't get us back into that channel creates an opportunity for more risk. Now, I don't know that it will come down. What I do know is I trust in our tools, and we're going to go have a read through how the primary market is set up using our suite of technical tools layered on top of the price of the S&P 500. Now, we're going to change the tact a little bit here, and we're going to look at it through the lens of the ES, the S&P E-minis, and that's on the left-hand side. I also do have the SPY here on the right-hand side, and we're looking at a daily chart as well, meaning each bar is one day. Now, when you take a look at the toolkits that are on screen, they have a sequence to them. And the Champion Trend Pack has 3 stages. Stage 1 is Champion Trend and Champion Cross. Stage 2 involves Wealth Signal, that's the orange ball. Stage 3 involves the breakout forecasters. And there's a recognition of when that ends. And what is likely to happen next is a pullback to test the breakout forecasters. If this is an early stage turn in the market, well then a resumption is more likely. Now we're in a late stage uptrend, but we got a resumption here. Now that resumption has taken us, of course, to where we made highs, and of course was last week. And what you can see very simply here is that this market is not in a spot right now where I see a lot of potential upside reward. I see more downside risk because of how far away we are. But I have to take my biases out of that, and I have to look at the signal objectively. So you can see the same sort of action right over there on the SPY, where we're holding above, and we've effectively bounced back up above the top lip of the Champion Cross Buy Zone. You can see that on the SPY. You can see that we tested the top lip of it, perforated a little bit there on the ES, and we bounced back up off of it. Now, we don't want to trade what we think is likely to happen. We want to trade the idea of, the reality of what's happening right now in a market like this, where you have a confluence of potential growth issues, policy issues, and we're moving into a period of time that is a little bit more volatile in general and a little less liquid. So where we are is a spot where the market has not yet recovered from the dip. We've got the fast speed line blue below the magenta on both accounts over here, the ES and the SPY, and that still tells us that we have not turned it back around. So you can see that happened over here as well when we had that pullback. The blue speed line pushed below the magenta. It was when we crossed back above that we saw over the next day to two a solid turn being installed. So we're not there yet, but what we can say here is take a look at the on-chart negative momentum shift. So you can see the red dot and a bar, red dot and a bar. Now these are part of the WealthCharts member exclusive tools. What that is a resistive structure that's been installed based on the strength of the reversals we saw on these particular days. Now, effectively, that means they are a challenge line. Getting above in tomorrow's market, roughly, I'll be as precise as I can, $546 and about 90 pennies or so. We can round this up to actually 547 for ease of communication here. Getting above 547, that opens the door to the next challenge level, which would be around 550. Now, of course, the highs. So what we've got as a setup right now is still a bullish market, bullish signal state with FANG stocks coming raging back, not every single one, but a good majority of them. And if the primary market continues to be pushed up through this resistive structure, we have the door open for several dollars higher to test the next resistive structure. This does not mean the market is cheap. It would still mean the market is fragile, stretched, but coming into the end of a quarter and deck chair reshuffling is very likely. Friday is going to be probably the most eventful day of this week, and we do get inflation data on Friday. In fact, the inflation data that the Fed uses. Now, to kind of bring this all home, you're getting an idea that the signal is still bullish, but we need to see if it's imminent to get up and challenge that negative momentum shift. So what we're going to do is reduce the time frame. I'm going to do this on the account of the ES here and take it to a 4-hour chart. And what you're looking at now is a 4-hour chart with the subcharts aligned with the tools that are on chart on screen here for you. I can do that for the daily as well, so you can kind of see them side by side. Bottom line over here is you're in a marketplace where the sell signal state on that 4-hour chart is starting to weaken and weaken and weaken, but we're still in it. So the idea of an imminent push right back up is not necessarily installed as of yet. What we have right now is we're trying to unstick ourselves from this sell signal state. We've got blue candles, which means a lot of technical damage. And when we take a look at the Spike 2.0 tool at the very bottom of the screen there in the subchart, you got these red dots at the top of the Spike 2.0 channel. What is that? Well, that means very likely the up that we've seen over the last half dozen bars or so on the 4-hour chart, we're at least going to see a partial retrace back down. So caution is still to be at hand with a champion trend sell signal zone, champion cross sell signal zone with the bottom of main chart block in play, and the Spike 2.0 tool putting us in a spot where a likely partial, at minimum, retrace of this move up is imminent. So at this stage, you've got some more clarity coming from a toolkit that says it's more opportune to manage for downside risk. And once that downside risk plays itself out, a partial retrace doesn't turn into a full one, a bounce up from there could become interesting, but let's not put the cart before the horse. Now you can tell that if you're able to utilize powerful tools to sidestep potential unforced error, it can make a big difference in one's trading. And if you can use a powerful toolkit of tools to triangulate when is the righter time, or for that fodder and for that dry powder to be put to work, it tends to work out better than not. Now, the WealthCharts platform and the Ultimate WealthCharts membership includes the things that I've just talked through, specifically the Champion Trend Pack Toolkit, the Spike 2.0 tool. There are some other marketplace indicators on the screen here, like Rob's ITP and TRP and my Triple S, but you've effectively got an explanation now for we've got some negative momentum shifts as challenges, and we don't have a signal state right now that says they're going to be imminently challenged. More likely, we're going to see a little pullback before an attempt to challenge them. And that means patience in a market that's quite risky. I hope you enjoyed this video. Looking forward to sharing more just like these in the days to come and weeks to come. And we are about to start the greatest and best Wealth 365 Summit. It's coming to you fast and feverishly. About 19 days away, looking very much forward to seeing you there. Simply get your seat by going to joinziad.com, and we look very much forward to spending some time sharing deep insights in the market, incredible lineup of speakers, multiple touch points from folks like myself and Rob. Looking forward to seeing you there. Go to joinziad.com, and we'll see you at the Wealth 365 Summit. It's coming up soon. Better get situated. Have a great rest of your day, and thanks for watching. Bye for now.